students, greetings of the day. I hope everyone is doing good. So in this session, we are going to continue the chapter that we have started in the previous class. The chapter name is Organizations Facilitating Business. So as I explained earlier in the previous class, in this chapter, we are going to learn about certain organizations which help us in carrying out our business easily, especially when it comes to India. In India, there are some organizations which are established to help entrepreneurs to carry out their business easily, because business is not a simple activity. It's a very complex activity. Okay, so what we are going to learn in this chapter, meaning of business facilitation, which we already covered, need for organizational and institutional arrangements for stimulating, supporting, sustaining business, difference between funding and non-funding organizations, purpose, function, and schemes of some of the facilitating organizations. Okay. The topic-wise analysis is given. So in this topic-wise analysis, this entire chapter, for the sake of convenience, both for teachers as well as students, the entire chapter has been divided into different topics. And in this topic-wise analysis, we have clearly mentioned in an examination where bits are given from. For example, in July 21 examination, 2 bits are given from topic 1.1. Okay. And what are those bits that are already covered in our MCQs? Okay. These are given at the end of the chapter. That also we will look here today. Okay. Next, Nana. And when it comes to July 21 examination, 1 bit is given for topic 1.3.1.2. Likewise, so in this way, we have divided the entire chapter into different topics. And in this topic-wise analysis, we have clearly mentioned how many bits are given from each respective topic. Next, chapter overview. So in what are the classifications or divisions in this chapter? Theory for classroom discussion, which we are going to learn line by line. Again, basing on this theory of classroom discussion, we have MCQs, and these MCQs have been divided into 3 categories. MCQs for classroom discussion, MCQs for self-practice, and MCQs for self-practice. Okay. Next, summary, test your knowledge, and key is also given at the end of the chapter, so that it is easy for you when you are going through SP1 and that is self-practice push MCQs and additional MCQs for self-practice, because these two will not be taught in the classroom. That is meant for your practice now. So if you have any doubts, you can ask them in the classroom, but they will not be taught separately in the classroom. Okay, so we have already covered the introduction part and some part in this chapter, right? So we have already seen what is meant by business facilitators, what is difference between business facilitator and business correspondents. So business correspondents means generally banks, and business facilitators means these are the organizations who help a business and do not engage in banking and financing activities. That is clearly given here. Okay, right. So business facilitating system has been divided into 3 types: layer 1, layer 2, layer 3. Layer 1 is called as lower layer of business facilitators or point of contact. Layer 3, intermediate layer of business facilitators or auxiliaries or aids to trade. Layer 4, upper layer of business facilitation or funding and non-funding institutions. So I have given, we have already explained this in the previous class, just I'm revising it. Okay, so layer 1 is called as point of contact. So in point of contact business facilitators, what we cover, so we have freight forwarder, business incubator, business accelerator, financial consultant, merchandiser, all these things. Okay, in topic 1.2 we have auxiliaries and aids to trade. Okay, right, Nana. So who are covered under auxiliaries or aids to trade, that is also given here. Next, topic 1.3, we distinguish between funding and non-funding institutions. So clearly it is given that non-funding institutions means basically these are regulatory bodies and they do not provide any sort of financial help to the businesses. See, the upper layer of business facilitation, or the layer 3, is called as upper layer of business facilitation. This upper layer of business facilitation is divided into 2 types: funding institutions and non-funding institutions. When it comes to funding institutions, they are also called as development banks, and these provide financial assistance to the business. So example for that is NABARD. Other examples of funding institutions are Exim Bank, IFCI, Indian Finance Corporation of India. These are some of the examples of funding institutions which provide financial assistance or help to the business. When it comes to non-funding institutions, they do not provide any sort of financial assistance, but they regulate the system. Example, RBI, it regulates the banking system. SEBI, it regulates the stock markets. CCI, it regulates the competition in an economy. IRDA. IRDA stands for Insurance Regulated Development Authority of India. It regulates insurance sector. TRAI, Telecom Regulatory Authority of India. It regulates telecom sector. Regarding this, we have some brief points then we have covered in the previous class. Now we will focus on the first non-funding institution, the important one in this chapter, that is Reserve Bank of India. Again, in this topic, we have subtopics. That means Reserve Bank of India is divided again into smaller parts so that it is easy for us to remember and focus also. So when it comes to ICA material, everything is bunched up, right? Everything is clubbed together. There is no point-wise classification there. But here we have divided each topic into subtopics and we have given in a point-wise manner so that it is easy for learning also. And we have underlined the important information that is to be remembered, that is from examination point of view. Okay, let us see the topic 1.3.1.1, that is Reserve Bank of India introduction. Right, Reserve Bank of India was established on April 1st 1935 in accordance with the provision of RBI Act 1934. Do remember one thing, first act will come, then in order to implement that act we need an institution. So we will establish an institution or organization. You can clearly see here we came up with RBI Act 1934, and then in order to implement this act, we came up with RBI. We established RBI in 1935, 1st April 1935. So once government comes up with a policy, it will convert that policy into act, and in order to implement that act, it needs an institution or structure. So it will establish that institution or structure now. So we came up with RBI Act we came up with an RBI Act in 1934. And in order to implement that act, we established RBI on 1st April 1935. Initially, it was a privately owned bank. At the time of establishment, it was a privately owned bank. But in 1941, later it was nationalized in 1949. What do you mean by nationalization? Nationalization means converting a private organization into government. That means government taking over that private organization. So at the time of establishment, it was a private organization, but in 1949, RBI was took over by the government of India and is fully owned by government of India. The central office of RBI was initially established in Calcutta. Now it is called as Kolkata, but was permanently moved to Mumbai in 1937. Its affairs are governed by Central Board of Directors, and the board is appointed by the government of India in accordance with the RBI Act 1934. Do remember one thing, RBI is an autonomous organization because it is governed according to the RBI Act 1934, not by the rules and regulations framed by the government of India. So whenever an organization is established under an act, it is an autonomous organization. That means government cannot interfere in its functioning. The RBI will function according to the RBI will function according to the rules prescribed in the RBI Act 1934. As of now, the RBI governor is Mr. Shaktikanta Das. Okay, so this is the introduction part. Next, role of RBI. RBI is the central bank of our country. It is India's eminent public financial institution. When it comes to financial institutions, it is public financial institution. It is the most important public financial institution. What sort of role this RBI has to perform? It is a central bank. Central bank means it is head of all the banks in India. So what sort of role it has to perform that are given in these points. So first role, RBI is the apex monetary institution of the highest authority of India. So in India, when it comes to money, it is the highest authority. It has the highest authority. RBI has the highest authority. Any sort of money will be issued by RBI. The amount of money in an economy will be controlled by RBI along with government. So when it comes to money, everything is to be decided by RBI. Okay, that's why it is an apex monetary institution. It plays an important role in strengthening, developing, and diversifying the country's economic and financial structures. Just like government, it also plays an important role in developing, diversifying, and strengthening the country's economic and financial structure. So do remember one thing, government alone cannot achieve objectives. In the same way, RBI also cannot, RBI alone cannot achieve its objectives. Okay, the government alone cannot achieve all its objectives, and RBI also cannot alone achieve all its objectives. In fact, the objectives of both government and RBI are one and the same. What are the main objectives of government? Economic growth, control of inflation. What are the main objectives of RBI? Economic growth and control of inflation. So these two organizations are different from one another. Institutions are different from one another. Government has its own separate set of rules and regulations. RBI also has its own separate set of rules and regulations. But the objectives of these two institutions are almost one and the same. Okay. So in order to achieve these objectives, they have to work together. If they work on their own without any coordination, they cannot achieve the objectives. Okay. So just like government, RBI also plays a very important role in economic and financial structure development, strengthening and diversifying. Right? Next, it is responsible for controlling the country's monetary policy. Okay, so in India, any type of policy that is taken regarding money, it is controlled and is to be implemented by RBI. What is monetary policy? Policy taken by the RBI to control amount of money in an economy. Policy taken by RBI to control amount of money in an economy. Okay. So that is called as monetary policy. And what is policy, sir? Set of rules and regulations to be implemented to achieve an objective. Okay. So policy is nothing but set of rules and regulations. It consists of all the rules and regulations and all the techniques that can be used to achieve an objective. So when the RBI wants to control amount of money in an economy, it has to frame set of rules and regulations, set of instruments that are to be used, Nana. So RBI has to clearly mention when this instrument has to be used, when these rules and regulations are to be implemented, so that they can. So the ultimate objective for all these things is to control the amount of money in an economy. So policy is nothing but set of rules and regulations meant to achieve an objective. Okay, and monetary policy means policy taken by RBI to control the amount of money in an economy. It is responsible for maintenance of economic stability and assisting the growth of economy. We have already discussed that one, Nana. See, economic growth should be there, inflation should be controlled, and both government and RBI will try to maintain stability in every form. If there is instability, it leads to lack of confidence both on the part of consumers and producers, leads to lack of economic growth. As long as there is stability, both consumers and producers will have confidence in an economy. For example, no one knows whether the third lockdown is going to happen or not. Okay, as of now, it is very clear that it is not going to happen. But 2 months back, we were quite skeptic about it, right? We were doubtful whether it is going to happen or not. When there is doubt in the minds of people, that means there is instability. No one knows what is going to happen tomorrow. I'm talking about 2 months back now. As of now, there is no issue regarding that. We are quite happy with that. As situations stand, okay, we are recovering in every way. Okay, economically, financially, socially, mentally, everything. We are recovering in every way. But 2 months back, we were quite doubtful. We were skeptic, Nana, whether there will be third lockdown or not. Okay, so when we have such kind of doubt in our mind, we will not. That means we will not be willing to. Consumer will not be willing to spend, and producer will not be willing to invest. Because if lockdown happens, Nana, consumer may lose his job. So if he starts spending before that, he may not have money during the time of lockdown. So he will restrict his spending. And if investor is doubtful about the lockdown, that means he is doubting that there will be lockdown, then investor will also not invest. That means it will lead to fall in production. So having a doubt is nothing but it is instability. It is instability. As long as there is no doubt, you will have full confidence in an economy. So that leads to stability. So along with Government of India, RBI is responsible for maintaining economic stability. Okay, there should be no abrupt increase in finance and monetary terms, and there should be no abrupt decrease in finance and monetary terms. There should be stability. So it is responsible for maintaining economic stability and assisting the growth of economy. It is responsible for development of adequate and sound. Here, sound means good. Sound banking system in the country, and for the growth of organized and capital markets. See, financial markets can be divided into two. One is money markets and the one is capital market. Money markets means we talk about banking system. Capital markets means we talk about stock markets now. So RBI is responsible for development of these two kinds of markets, both money markets and capital markets. You can argue that capital markets means responsibility of SEBI, right? Along with SEBI, RBI also plays a very important role there. Next now. It acts as an advisor to the government in its economic and financial policies, and it also represents the country in the international economic forums. Here, international economic forums means you're talking about IMF and World Bank. And don't be in a dilemma, Nana. So we have clearly mentioned the numbers here, right? At the end of each word. That means in footnotes, you have meanings regarding it. Footnotes, we have meanings regarding it now. So you can go through that while revising also. You will get a clarity. What does these terms mean? Okay. So you will not find this in ICA material. Okay. We have added here so that can't expect every student to carry dictionary every time, right? Okay. So if you mention the meanings here itself in the material itself, it will be beneficial for the student. So it is one more advantage or one more additional feature that you will find in our material. Okay. Next, it also acts as friend, philosopher, and guide to commercial banks. No need to explain that, Nana. From time to time, it will keep on guiding commercial banks. It will keep on advising commercial banks. And in case of any crisis, the RBI will bail those banks. Okay, either from decision-making point of view or from financial assistance point of view. Okay. Next, RBI has to control inflation to see that main priority sectors like, so for India, in order to develop, the main priority sectors are agriculture, export, and small scale industries. So if India has to develop, these sectors have to grow. And if these sectors need to grow, these sectors have to be provided. These three sectors have to be provided with sufficient amount of financial help at lower rate of interest. Then only these sectors can take loans from banks. When rate of interest on loans is less than, especially for these three sectors will take more and more loans from banks. When these three sectors take more and more loans from the banks, they can invest more and more, increase the production. As these three sectors grow, the economy also grows. So for India to develop, these are the three main sectors: agriculture, exports, and MSME sector. Small scale is nothing but MSME sector. So RBI, on the one hand, it has to control inflation. On the other hand, it has to make sure that sufficient amount of funding is or loans are given to these three sectors, especially at low rate of interest. Okay. Example for that one is Mudra loans, Nana. Okay. Next, it provides market for government securities and channelize credit in desired direction. We can clearly explain this point in SLR. Okay. In SLR. See, the banking system is not that simple. What we think is that banks simply accept deposit and give loans, right? That is not that simple, Nana. Yes, banks accept deposit and they give loans. But in between, out of these deposits, it has to maintain certain amount as reserves. So what banks will do? Banks, they accept deposits and they will use these deposits to give loans. Okay, but that is not entirely true or complete. Okay, out of these deposits, certain amount is to be kept as reserves. So for example, if 1000 rupees is deposited, 10% is to be kept as reserves, means 100 rupees, and balance 900 rupees will be given as loans. Okay, again, these reserves is divided into two types. These reserves are divided into two types. One is CRR, another one is SLR. CRR stands for cash reserve ratio. CRR stands for cash reserve ratio, and SLR stands for statutory liquidity ratio. Okay, so these are the reserves which every bank has to maintain. There is no exception to this rule now. Okay, so when it comes to CRR, bank has to maintain some percentage in cash with RBI itself. Every bank has to maintain certain percentage of cash, certain percentage in cash with RBI. So in deposits, certain percentage is to be maintained in cash with RBI, that is CRR. When it comes to SLR, the banks have to maintain certain percentage either in cash or gold or government securities, and these are to be maintained with the bank itself. Okay. Now, if you look at the rule when it comes to SLR, SLR is to be maintained either in cash, gold, or government security. There's a rule that is passed by RBI and every bank has to follow. So when RBI has included government securities in SLR, that is, if banks need to maintain SLR, they can maintain either in cash, gold, or government security. So cash is cash is scarce. Gold is very scarce. So the only alternative available for the banks to maintain SLR is in government securities. So the RBI has floated this rule. That means it has created a market for government securities. So whenever government wants to sell securities, immediately banks will try to purchase these government securities because they can use these government securities to keep it as SLR, statutory liquidity ratio. That is what it is given here, Nana. It provides market first. So basically, by passing that rule, RBI has created market for government securities, and it will channelize. It will make sure that credit is given to the desired sectors. That means channelizing credit in desired direction. So when India has three priority sectors, the RBI will make sure that the credit is flowing to these three sectors specifically. This is the role of RBI. Okay. Next, functions of RBI. So what are the functions of RBI? What functions RBI has to perform? Let us see one by one. Okay. The preamble of Reserve Bank of India. Preamble means here act or constitution basically. Okay, the preamble of Reserve Bank of India describes its basic functions as. So in the act, what are the basic functions that are given? That is in definition, Nana. To regulate the issue of banking, to regulate the issue of bank notes, that is the first function. Okay, and keeping in reserves. So this is the first function. First function is issue of bank notes. Keeping of reserves with a view to securing monetary stability. So from time to time, RBI has to maintain monetary stability in the economy, and generally to operate the currency and credit system of the country to its advantage. And RBI has to make sure that RBI has to the RBI has to make sure that the currency and credit system economy is working efficiently. So these are the three primary functions of RBI, which is according to Act of RBI Act 1934. Okay, Nana. So apart from these, there are some other functions which RBI needs to perform. So RBI performs both traditional functions as well as development and promotional functions as follows. Let us see what are the traditional functions first. Okay, then we will see other things. Okay, right, Nana. Right. So first function is issue of currency. We all know that is the primary function. So whatever the amount of currency that is there in an economy, that is given, issued, and circulated by RBI and banking system. Okay. So if you have a 100 rupees note or 200 rupees note or whatever the currency you have in your pocket as of now or in bank, all that is issued by RBI. So RBI is the sole authority for the issue of currency in India. There is small rule here that 2 rupees and above will be issued by RBI, and below 2 rupees, that is 1 rupee and 50 paise. 50 paise as of now it is not issued, right? So 1 rupee. 1 rupee is issued by government now, government of India. So the RBI is the sole authority for the issue of currency in India other than 1 rupee coins and notes and subsidiary coins. Okay. Because notes other than 1 rupee coins and subsidiary notes and coins will be issued by government of India, the magnitude of which is very relatively small. So majority of the currency or 99% of the currency is issued by RBI. Next, banker to the government. That means RBI acts as a banker to the government. See, my banker is SBI because I have account in SBI. In the same way, government has an account with RBI. So RBI acts as a banker to the government. So in this role, what type of functions RBI perform? Okay, as a banker to the government, it performs the following functions. Let us see what are those. It transacts all the general banking business of the central and state government on their behalf and carry out all the banking operations. So RBI carries out all the banking operation, receipts, payments, all the banking operations on behalf of central government and state government. That is the first point. Next, it manages public debt. Public debt means what? Government debt. So it manages public debt. That means when RBI is maintaining all the receipts and payments, it can easily pinpoint the public debt. Okay, so that is the reason why it manages public debt and is responsible for issue of new loans. So if government of India is in need of new loans, the RBI will provide these loans to government of India or a state government. For the success of loan operation, it actively operates in a gilt edge market. Gilt edge. Here, gilt edge means we are talking about government securities. Sir, what do you mean by gilt edge? See, if you look at the paper corner, I'm just taking this paper as an example, Nana. So this paper corner is a sharp corner, right? It is sharp corner, Nana. But when it comes to government securities, the shape of the paper edge will not be like this, Nana. It will be a curved shape. It will be a curved shape like this. And this edge or this curve will be coated in gold color. Gilt means gold. Okay. So normal paper will be of sharp edges, right? Especially the four corners. But when it comes to government securities, the four corners will be of curved shape, and those four corners will be covered in gold color. Gold color, Nana, not gold coated, gold color. Okay. So any type of loan, if government needs any type of loan, RBI makes sure that government is able to sell its securities in the market and get that loan. Okay. And it will keep a track of this loan also. So how many loans are government of India has taken from public or from market? What is the maturity date of each loan? Because it is it acts as a banker to the government, right? So it has to maintain all the data. And from time to time, it has to inform the same to the government of India. Okay. So for success of loan operations, it actively operates in gilt edge market, that is government securities market, and advises the government on the quantum, that is volume, timing, and term of new loans. Okay. It also sells treasury bills. Treasury bills are the bills issued by the Treasury Department. Basically, these bills are issued at discount and redeemed at par. Treasury bills are nothing but one form of government securities, which are generally issued by Treasury Department, and generally these bills are issued at discount and redeemed at par. Okay. So it also sells treasury bills on behalf of government of India in order to wipe away excess liquidity in an economy. Whenever there is excess liquidity in an economy, the RBI will sell treasury bills in the market and will try to reduce the amount of liquidity. Here, liquidity means money. So when there is excess money in the market, what will happen? Let us see. So if the amount of money in economy is high, nothing but there is excess liquidity. So I'm just talking from consumer point of view. If the amount of money in an economy is high, what will happen? Income of people will be high. When the income of people is high, they are not going to sit idle, or we are not going to sit idle, right? What we will do? We will demand more goods. Demand increases. When demand increases, demand will be greater than supply. That means what will happen? Prices will increase. This is nothing but inflation. And one of the objectives of RBI is to control inflation, right? It has to control inflation. So how to control inflation? The only solution is to reduce this money in an economy. If the RBI is able to reduce the money in an economy, income of the people will decrease, demand decreases, supply will be greater than demand, prices will decrease, and inflation can be controlled. So if RBI simply asks the people to reduce the amount of money with them, they're not going to listen. So RBI had to act in an economy. How it will act in an economy? Let us see that one now. So this is RBI, right? This is RBI. And this is economy or public. Okay. So as of now, economy has more money. Money is high with them. So government of India needs to reduce, RBI needs to reduce the amount of money in an economy. So what RBI will do? RBI will sell treasury bills or government securities to the public or economy. Economy and public mean one and the same. Okay, I will write it here itself. Okay. So when it's selling it, Nana, the public is buying it, right? The economy is buying it. So what will happen? The money will flow from economy to RBI. Money. So when the money is flowing from economy to RBI, the money with public decreases. When the money with public decreases, the inflation can be controlled. The inflation can be controlled. So in this way, RBI acts in an economy by selling securities. And you may ask, sir, when the amount of money with the people is less, then RBI has to increase the amount. It has to maintain stability, Nana. It has to maintain stability. So how can it decrease the amount of money in an economy? What it will do? It will buy the treasury bills from public. Whatever the treasury bills it has sold on, it will buy the treasury bills from the public. So when it is RBI is buying it, the money will flow from RBI to public. So amount of money with the public will increase. Okay, so this is the point here. Okay, Nana. Next, it makes advances to the central government and state government which are repayable within 90 days. So it's an advance, Nana. Advance means basically interest-free loans. So within a period of 90 days, these loans are to be paid, Nana. Only principal is sufficient to pay. Advance means there is no need to pay any sort of interest on it. Okay. It acts as an advisor to the government not only in policies of banking and financial matters, but also on economic issues in the field of planning and resource mobilization. As I said earlier, both Government of India and RBI has to work together, not only on economic front, but also on other fronts, other areas also. Then only both these two can achieve their objectives together. Okay. Next one, it has a special responsibility in respect of financial policies and measures concerning new loans, agriculture finance, legislations affecting banking, credit, and international finance. Right now, I will take an example. See, during first lockdown, RBI announced moratorium. That means for a period of 3 months. That means there is no need to pay any loan for the period of 3 months now. Okay, it will not, see, no need to pay any loan for a period of 3 months, but after that you have to pay entire thing with additional interest also, but it will not affect your CIBIL score. CIBIL score is nothing but that defines your credit worthiness. Okay, that was the rule, that was the facility given by RBI. Okay, how far it is affected is different story, but what RBI said, as the economy is in lockdown, the income of the people is drastically affected. So those who have taken loans from banks, there is no need for them to pay loans for a period of 3 months. Basically, RBI is allowing us to postpone the payment for a period of 3 months now. Okay, that is a facility given by RBI, and RBI is the only authority who can do such kind of things. Bank cannot do it now on their own. So it has a special responsibility in respect of financial policy. This is a financial policy and measures concerning regarding new loans. So to which sectors new loans are to be given? Agriculture finance, legislation affecting banking, credit, and international finance. So these are the functions which an RBI will perform with the bank, to the government of India, now government or state government of India. Okay, next, bankers bank. This is the third function. What is meant by bankers bank? Let us see. RBI not only acts as a banker to the government, but also acts as a banker to the bank. The RBI has extensive power to control, supervise. So it is the superseding authority on the entire banking system. That means all the banks in India, not only banks, non-banking financial institutions, all these are controlled and supervised by RBI. That means they are reporting to the RBI. It is a superseding authority. That's why it is called a central bank. Okay. The RBI has extensive powers to control and supervise commercial banking system under the RBI Act and the Banking Regulation Act 1949. So at the time of nationalization, so RBI was nationalized in 1949, right? So at the time of nationalization, the government of India felt that RBI Act 1934 is not sufficient. So it came up with another act. So now RBI has two acts. With the help of these two acts, it carries out its functions. Okay. So to control the credit position of the country, the RBI enables all the scheduled banks. Scheduled banks mean what? Banks which follow second schedule of RBI Act are called as scheduled banks. Basically, in this schedule, some rules and regulations are mentioned, Anna, which these banks have to follow. So, if banks are following the second schedule of RBI Act 19, the second schedule, it is second schedule of RBI Act 1934, then such kind of banks are called as scheduled banks. Almost all commercial banks are scheduled banks. So, the principal rule, how to identify a scheduled bank. If banks are maintaining CRR and SLR, those banks are called as scheduled banks. Simple rule. Okay. So one of the rules in second schedule is to maintain CRR and SLR. Okay, so enables all the scheduled banks to maintain certain minimum cash reserve ratio with RBI against the demand and time liabilities. That is what I have explained on a CRR. Whatever the amount of deposit these banks are getting, they can't use that entire money to give it as loans. Out of these deposits, they have to maintain certain amount of reserves. These reserves can again be divided in two types. One is CRR, which is to be maintained with RBI. Another one is SLR, which is to be maintained with the bank itself. That is clearly mentioned in the schedule, Nana. Next, it provides financial assistance to the scheduled banks and state commercial scheduled commercial banks. SCB stands for scheduled commercial banks in the form of discounting of eligible bills and loans and advances against approved securities. The point is very, very simple. When I am in need of money, I will take a loan from SBI. SBI is not going to give me that loan for free, Nana. it asks me to keep something as collateral with that, security with it. So what I will do, I will keep some asset as security with SBI and I will take loan. In the same way, when SBI is in need of money, it will approach RBI. So RBI will also ask the same thing. You keep something as security with me, then you can get money against that security. So when banks are in need of money, what they will do, they will keep some security with RBI and they will borrow money from RBI. In this way, if in need of money, banks can get it from RBI. That's why it is also called as lender of last resort. If RBI also is not willing to give money, is unable to give money, then banks will not have any sort of money now. So when banks are in need of money, what they will do, they will basically adjust among themselves. If that is not possible, then they will approach RBI. That's the last resort which banks have, last option. It also conducts inspection of commercial banks and calls for returns and other necessary information from banks. Okay, so this is about bankers' bank. So as when required, what RBI will do, it will conduct the inspection audit of these commercial banks, Nana, and it will call for necessary information from banks, commercial banks. Okay, next, custodian of foreign exchange reserves.